Hi, and welcome to a new episode of ESG Impact, the New Pioneers. Today's guest will be Eckart Vogler, Managing Director of Investindustrial, Luxembourg, and Head of Funds and Investment Finance. The second guest will be Serge Younes, Head of Sustainability at Investindustrial. Welcome, gentlemen.
Thank you.
Welcome.
A real pleasure to host you today. So could you give us first a quick snapshot of your firm?
Of course. Investindustrial was founded in 1990 out of an industrial group and currently has more than 13 billion of raised fund capital. We're one of Europe's leading independent investment groups. We're focused on taking control positions in companies predominantly headquartered in Italy and Spain, medium size, but that are leaders in their fields and that have strong potential for international growth, and in many cases already have significant international presence. Actually, 2/3 of our portfolio companies' revenues are generated outside Europe. Investindustrial has a team of more than 200 professionals representing 21 nationalities, based across offices in Luxembourg, where we have our main fund platform, United Kingdom, United States, Switzerland, Spain, France, and China. We focus in 4 main sectors. Industrial manufacturing, where we have the majority of our investments, consumer and leisure, healthcare and services, and technology. Investindustrial has functional specialist teams who are specialized in the mentioned sectors to support all firm-wide investment activities. In addition to this, we have a 25 people strong operational improvement team to support portfolio company growth. And most important for today's topic, already since 2016, we've got a dedicated sustainability team under the management of Serge to support all firm-wide activities, but also to work very closely with all the portfolio companies. The team supports them to define and improve their sustainability strategies, execution, and outcomes.
This is a great setup. And in this context, what is your core strategy in terms of ESG?
For Investindustrial, we believe that incorporating environmental, social, and governance impact considerations into our business decisions is essential to creating value for our stakeholders. In short, it's part of our DNA. We want to build a more sustainable, long-term strategy for all our portfolio companies. As such, we aim to be the industry leader on all relevant aspects of sustainability. This includes our active engagement in industry groups like the Net Zero Asset Managers initiatives, an initiative that supports GPs in improving their decarbonization efforts. We've been actively managing ESG and sustainability issues for 2 decades, and we are certainly an industry leader. During this period, we have invested in and built up our sustainability team, and we have developed our own proprietary sustainability approach and framework, which we call our sustainability program. We have recently refreshed and published our 2030 sustainability strategy. The sustainability team supports and works on the full set of the investment process. This consists of preparing ESG due diligence at the pre-acquisition stage and continues with closely monitoring after the investment up to the exit. The team regularly engages with all the portfolio companies, and the portfolio companies have to report on a quarterly and annual basis. And as a result, we collect more than 10,000 ESG-related data points each year.
That is what we would call a very embedded ESG strategy. Congratulations for that. And what role does climate mitigation play in your program?
Investindustrial has indeed been very active in addressing climate mitigation, starting already from 2007, across all portfolio companies and across the group activities. In 2021, we announced that we would set science-based targets by 2030. And this means that also 100% of our investee companies will set science-based targets by this date. We're also active member and contributor to various industry groups like the Initiative Climate International, Net Zero Asset Managers Initiatives, and in the development of the Science-Based Targets Initiative Guide. We're also very proud that we continue to achieve top scores in the annual UNPRI assessment, and that we are B Corp member since 2020 already, achieving one of the highest certification scores of all private equity buyout firms.
And could you tell us a little bit also how complicated the implementation of SFDR was? How did you solve that data collection element?
Well, as you just heard from Eckart, we've been collecting data since at least 2016 on our portfolio. So the primary purpose of this was to actually manage and monitor how the portfolio is performing. So the team and I, now we're coming close to the end of that quarter, we're collecting all the yearly data, we're analyzing this information. And then historically, and part of the reason why it started is that a number of our LPs were asking for some information, and we had that readily because that's how we're managing our portfolio from an ESG perspective. When SFDR was implemented, it was relatively straightforward. Most of that data we had already. Most of that data, as you can see in front of us, we have a sustainability report. It's in that report and has been for many, many years. One of the issues that we've seen with SFDR is the pace of its implementation, how quickly it came through, but also the number of iterations that it has gone through, I think already twice, and it's going through consultation again. So one of the problematics that we have is effectively managing that kind of change as it comes along. But ultimately, if I just kind of wrap up on that question, we, even before the introduction of SFDR, we're effectively managing the same way that is described as an Article 8 fund. And in fact, a lot of our funds that are under SFDR are Article 8.
This is great because this shows that when you're ready, this kind of transformation implementation goes, let's say, in a rather smoother style then.
Absolutely.
How many Article 6, 8 or 9 funds do you manage today? So it would be interesting to hear about that. And do you think that it could be used also for the fundraising element?
Yeah, as Serge mentioned, we are currently focusing on Article 8 funds here in Luxembourg. And we've got 3 active funds, of which one is our third lower mid-market fund, which we closed at 1.1 billion above target last year. And this fund is actively investing now. In our case, the investors are aware of the ESG policies that we are applying and have been applying for many, many years already. And all of this has been in place prior to SFDR implementation. And so with SFDR, obviously, we are fully compliant. And as basically Serge mentioned, we had to put a new layer on top of our existing investor reporting that with the data that we collect on a regular basis as part of our existing sustainability program. And this sustainability program is obviously a very important part of investor due diligence.
In the world of sustainable finance, do you think that the efforts are bold enough? Would we require an extra mile?
It's a good question. I think where we're at with the SFDR classifications is some people have taken it as part of labeling and confusing the two aspects. In fact, you've got a lot of managers that are doing very similar work on sustainability as Investindustrial, who've taken a step to classify their funds as Article 6, even though they're doing quite a lot on sustainability, and that's a position that they've taken from a conservative view, whereas other funds effectively have gone a bit more bold, classified as Article 9 or even Article 8. And then as they discovered what it meant, actually, what SFDR classification entails and the requirements for it, have downgraded since then. What we've also seen is a new classification that might be needed, as we're seeing more managers doing sustainable investments, but maybe not Article 9 investments, right? So not the 100% of the AUM of that fund being sustainable investment. And I think there's a bit of confusion. I think there's colloquial language that's being used as Article 8 plus that doesn't exist in the regulation, but nevertheless people are using that. Ultimately, what I believe is a lot of the managers need to be doing what they've committed to their LPs and investors in terms of their sustainability approach, and I think this is fundamental. Where we're lacking today is a bit of education, so that we're getting an alignment from a lot of the advisors, whether it's the legal community, the accountancy community, and others that are working in our space and supporting us in terms of what it means to really be an Article 6, really be an Article 8, or be an Article 9, and the implications on the fund manager and its advisors.
Completely makes sense to integrate more education and help then the ecosystem to build that knowledge up. Okay, great. And now if we look at the implementation of ESG within the value creation model of your firm, what could you tell us about that? And do you think that non-financial returns would, let's say, help to grow the returns?
Well, when investing into a new business, we've got three main goals. So to maximize returns for our investors in a manner that reflects our firm values. To pursue an industrially driven, sustainable strategy to build better companies for the long term. And to work relentlessly towards leaving no trace economically or ecologically, and whilst leaving a positive mark socially. Investindustrial works with an entrepreneurial and industrially driven approach with a strong sector and industrial expertise. Investindustrial's approach to build value or to create value for its funds is by successfully growing its portfolio companies, mainly through internationalization, consolidation, and/or product diversification. In addition to this, we focus heavily on improving operational efficiencies within the portfolio companies. We're focusing on 5 key value creation levers within the operational improvement team. These are supply chain and procurement, digital value creation, financial optimization and risk management, talent management and communication, and last not least, sustainability. It is certainly difficult to quantify to the euro the improvements of sustainability and the achievements of sustainability in the final valuation at exit. But we strongly believe that, based on our more than 20 years of experience, that robust and improved sustainability strategies and their implementation at the portfolio companies are supporting value creation and are a significant factor in our successful exits.
This is a very strong and positive message, which we honestly like a lot. Since we also like the pragmatic part of this interview, could you share with us a little bit 5 enhancement changes you have implemented within your own firm and or your portfolio companies?
I think it works both ways for the firm and the portfolio companies, and they're the same elements to the same soup, let's put it that way. Ultimately and fundamentally what we're trying to do is to build better companies in our portfolio, but also build ourselves as a better company. And the ingredients to that soup are as follows in my mind. If you make me the chef, the first one and most important one is education, and followed by education, you're changing the culture. And it's incredibly important how you're impacting through sustainability and through the other levers from operational and change management on the portfolio as it evolves, as it grows. You're bringing those elements into it and helping it grow. I think the other two elements that I want to bring in, so number 3 and number 4, one of them is innovation. But ultimately, it's not innovation for the sake of innovation. It's what I'm going to bring to the table as number 4. It's sometimes the new ways of working. It's things that we've done in the past sometimes that work for a different context that we turn around and say, hey, that might be useful as an approach to take here. So, go back through education, culture, innovation, new ways of working. And fundamentally, Eckart mentioned earlier, we became B Corp back in 2020. We found B Corp an incredible tool, an incredible mechanism to help us through the first 4 ingredients, right? It helped us in educating ourselves. It helped change our culture. It helped us think in different ways, how we're working with our investors, how we're working with our portfolio companies, how we're working with the entrepreneurs. And if you want, it's the sauce that brings in all the rest of the ingredients, is getting that B Corp certification. That's how we're working with our portfolio companies. So today, about 1/3 of our portfolio is either certified B Corp or going through that certification. That kind of helps the narrative of what we're doing. And ultimately, for us, all of this is the final dish that's called building better companies.
And I'm persuaded that those ingredients will lead us to a fantastic recipe and then also nice dinner tonight.
Fantastic.
Serge, Eckart, thanks a lot for joining us and for sharing all your insights. It was really a pleasure to host you.
Thank you.
Thank you.